Well, go on, you multifamily enthusiasts. This is Shalon Hutchison. My friends in real estate know me as Hutch, the marine investor. And I tell you, season three just keep delivering more and more. Today, I have a good friend with me, and we've been tracking each other's journey and communicating, molding, and mentoring, inspiring each other for a few years now. And I tell you, you are in for a treat, especially if you are a military veteran listening to this, or even if you're on active duty, because there's some actions that you can take that you might not be aware of, and there's some things that are going on in your life that you have not yet find value in. And I'm really hoping that this episode will be transformational for you in helping you to understand more about real estate and also more about some of your options and the way to find purpose into a lot of the things that you've been going through. See, our guest today has been serving in the Marine Corps for over 20 years on active duty. He's invested in real estate with a focus on long-term stability and growth. His passion is financial knowledge to motivate. He's motivated by having knowledge about finances and also to help others make informed decision in regards to their financial future. So without further ado, Mr. Travis Hill, greatly appreciate you joining us on this podcast episode, brother.
Hey, thanks a lot, Hutch. Super stoked to be here. And we could have talked for another hour and a half before we ever hit the record button. So
Yeah.
grateful to be back and grateful to see you. You still look the exact same from what, 3 or 4 years ago when you were over here. So Mother Nature's treating you well, buddy.
Okay. Thank you. Thank you, sir. Thank you. Thank you so much. So knowing you, man, I bet you have something, a transformative message you want to share early in this conversation. So I want to ask you, Travis, do you have a favorite real estate quote or mantra that drives you?
I do. Like my bio said, my mantra is your success is my happiness. I think that with the amount of military members that we have that don't understand simple ways to achieve financial wealth and long-term stability, for example, the VA loan, with house hacking, with what we have available to us as service members, if I can impart something about what I have learned through my successes and failures in real estate investing, absolutely, your success is my happiness.
Man, that's definitely a good way to go, man. Because if you really think about it, man, one of the biggest way to really achieve greatness and purposeful is really to help people, man. Because you can have all the money in the world, right? But what really is important is the impact that we can make, and especially you and I, who value our veterans community and always want to give back to them, whether it's sharing information or helping them see things from a different light. So, hey, kudos to you, man, for finding value in giving back to people. So,
Thank you.
Travis, I read your bio. It was maybe about 4 words, man. 20 years in the Marine Corps and a deep experience in real estate. I don't think I did you by an injustice, man. So can you tell our audience a little bit more about yourself?
Sure. I was a young college grad, followed my fiance, now wife, to Vegas, started investing in early 2000s. I would go and I would house hack the second biggest house in a community in Las Vegas. I would wait for phase 6, phase 7. I'd reinvest or I'd refinance that property and repeat that process. So joined the Marine Corps in 2003, continued to invest in single family homes. Of course, deployed, 2008 hits, and Vegas gets 50% losses. I'm a young married, 2 kids on the way, 3 kids on the way, second pump to Iraq, first pump to Afghanistan, second pump to Afghanistan. So when I come home by 2011, all of my tenants have left. We had to end up short selling all of our properties in Las Vegas. And had I learned or had I acted from what I know now, I only would have cried a week instead of 7 years. And I would have started buying homes again in that 2012 and on. Instead, I chose to wait. We licked our wounds. We did a very Dave Ramsey. We ate rice and beans and saved our money to get a nest egg again. And then started investing in single family homes in the Midwest, in Milwaukee, Wisconsin. And that one led to 2, which led to 3, which led to about 5, 6, 7. Started in understanding in other markets, started doing direct mail to sellers in Cleveland, Ohio, started purchasing properties there, and learned how to communicate. I learned how to understand what a team is, and especially doing it out of state and finding the right contractor, the right real estate agent, the right loan, the right lender. Finally got introduced to Dave Perret from Military Millionaire,
Yeah.
which, and then you and I were able to meet fortunately and blessed to have you in our house to talk about syndications. Was able to bring other people, which have also invested with you in other syndications in properties across the country. Learned about being a limited partner and the passivity that comes with that. And we can talk more about being an LP and what that means for service members and how we employ that. And then finally learned about what private money lending is, that there's companies that are hard money and then people are willing to share their money, and you get in a real estate position like a bank with a guaranteed rate of return. So you're safe on a residual income basis off your capital, your principal, and also you're getting the first position of title on that real estate property to hold it as a piece of security. And then learned how to do some flipping with some multifamily in out of state, and doing that out of state. And wow, that's flipping out of state commercial properties is definitely an interesting thing. And then finally started learning about sub two and creative financing. It has been a wonderful journey. I love doing it. I continue to do it. I love making the contacts and helping people understand that there's a real estate wall and that everyone has a ladder. And I want to help you put that ladder on the wall and have you start climbing.
Man, that is a lot of information for a one listener that's listening right now. We have to unpack that, because you kind of breeze through that and make it sound so simple. I wake up one day and I just did all these things, and amazing things happen and some bad things happen, and then more amazing things happen. But let's dissect that for a little bit, man. We talk about you were deploying in a combat environment where people are really trying to kill you. And you, before you joined the Marine Corps, you had the understanding like, look, it is my duty, my obligation, and my responsibility to actually create something that can feed my family. Or if somebody really is successfully killing me in combat, these assets can take care of my family. Now, let's talk about what got you started in the early 2000s in real estate.
Sure. My fiance at the time was a loan officer.
Okay.
And she's, hey, I'm doing these loans. You should buy a house. And this is what people are doing. And this is before Bigger Pockets. This is probably before the internet, but I can't confirm or deny that. But there was no Bigger Pockets. There was no YouTube. There was like maybe like what Carlson Sheets, right? That dude back in the day. Like we're going back when Dukes and Hazzard was still an awesome thing to watch. But I was like, oh, okay. And then I was house hacking, but didn't know that was what I was doing. And then didn't realize about refinancing. I'm like, oh, I can charge people to rent. They pay down my mortgage. Oh, this is cool. And then that just snowballed from there.
Yeah, man. So it's funny that you mentioned culture sheets, because when I came to America, I'm not sure if I shared this with you in our conversations, but when I came to America, that's the strategy that my dad was utilizing, right? He was a real estate agent, but he was also a real estate investor. And he would listen to those cassettes to the point where he even makes some copies of those freaking cassettes. Some people don't even know what a freaking cassette is. You know what I mean? So he would make a copy of those cassettes and he would send them to me to Hawaii for me to learn more about how to own some of America. So now we focus in owning more of America by larger multifamily properties. It's really cool that from an early age you found value in something bigger than the norm American dream, right? Your focus was, yes, we can own a piece of America, right? But this piece of America that I'm owning is going to provide me cash flow. And this is a mantra that I like, brother. I got it from one of our indirect mentor, and he says that one of his mantras is that I have no debt other than debt that's been paid for by others. And when you realize that you can stop being selfish and you can buy a house and share it with others, and they willingly pay you to stay there. It's a beautiful thing, man. So that now we're talking about, if you listen to this, we're talking about turning a liability that in society wants you to think that your primary residence is an asset. But it's all actuality is a liability, because he's not putting money into your pocket. And there's some strategy, there's some strings you can pull on to change that. And Mr. Travis Hill pulled on some of the strings and ensure that we share these houses with people, and they paid him to stay at his house, increasing his cash flow. So that's awesome, man. Where did you go from there?
From there, the recession hits and I continue to deploy.
Yeah.
And my lovely wife with our children, she's in Vegas. She's picking up the rent checks from the mailbox, right? She's asking the tenants to, hey, you can't pay $1,500. Can you pay 12? And then a couple months later, can you pay 1,000? Can you pay 8? Can you pay 5? Can you pay $100? And it just got worse and worse. And so I come back from my 2011 deployment. She's like, hey, I'm living in North Carolina. I'm a corporal at the time. I'm a sergeant at the time.
Yeah.
We have 6 mortgages that we're paying, making, what is a sergeant in 2011 making?
Definitely not a lot. That's
Definitely
what.
not 6 mortgages worth. These are
Yeah.
all $250,000, $300,000 homes, which are now 3 times that. But yeah, so we ended up short selling them, and we're like, man, we failed. We had a year's reserve. I thought I was doing the things you were supposed to do.
Yeah.
And so I struggle with me, who I lived through the recession. And unfortunately, there's so many gurus out there today. They're like, everything is great when you buy real estate. It's not. And when people say that rent doesn't go down, even no matter what, that's a half truth. And I got to call BS on some of these people, because I'm like, there is, in my market of Las Vegas, a 50% decrease in equity or value caused our rents to go down to where we lost homes.
Mm-hmm.
And I didn't have a 6-figure job that could offset the difference. So we short sold them. We gave them the IRS. We said, hey, they're worth this much, but we owe this much. We had to pay the difference, like all that stuff. Like, we worked through it. So there is a connection, in my experience, with economical things. And this is where I learned, right? Like, when people ask, well, what did you learn from that? I learned that if I stare so much at the bark of the tree, I didn't even see the forest fire around me. I didn't see the bond. I didn't listen to C-SPAN. I didn't listen to economy. I'm like, I'm just going to focus on my houses. When you're focused on your houses, you have to be aware and being smart of all the other economical things going on around you. I mean, like, so I'm more aware. I'm listening, I'm watching, I'm reading, and I'm listening to people that have greater value and understanding of things that I don't know about, or I have an understanding of from real estate.
Right.
And just try and incorporate that. So I have a better foresight, right? As an officer, if I'm looking inward the whole time, I can't see anything upward, onward, and forward like I'm supposed to. And so that principle applies to real estate as you become an investor.
100%, man. And so even in multifamily space, one of the things that we do frequently is there's a plethora of third-party reports, unbiased reports that reports in the markets, and not just real estate, but some of those things that intertwined with real estate. The price of lumber, that will definitely prevent people from building faster. Different things. If appliances are not able to be shipped from wherever they're shipped from, overseas, Taiwan, China, whatever the case may be, right? Then people development is going to slow down. And if that's your cup of tea, where you invest in new developments, then it's really important to understand the macro economics and also how it affects yourself on a micro level. So looking at things like CoStar reports, whether if you're paying for it or you have a friend that know you, they can pull the report for you, or you're reading some of those free reports from the different brokerage company or real page analytics to help you to understand exactly what's going on in the market. And really, it's really important, Travis, the point is to pay attention to who's saying what. Because if you're watching the business news and some guy or gal come on there and talk great about this company or this sector, it's important to understand that those are paid speech. So it's important to understand who is saying what and why they might be saying certain things. So ensure that as you venture into different asset class in real estate, that you are actually doing your due diligence if you listen to this. So to each their own in their investment strategy. So it's important to pay attention to who's saying what. So we talk about purchasing a single family home and growing through the recession. Now, you mentioned earlier about subject to. Now, is that something that you think would have assisted you in that environment, or a strategy that you would have used in that economic environment?
Back, like, recession time?
Yeah, first let's talk about what subject to first, and then talk about if that would have been applicable back then.
Sure. So subject to is the short-term phase for subject to the mortgage. And it is wide and and from my understanding, real estate agents learn about it in real estate school to become a real estate agent, but it's very taboo for some people. Almost, you tell them like, oh, that's illegal. And there's so many ways, like, you wrap the existing mortgage around what you want to do, and then you can do a novation. So it's hard to talk about without getting into the weeds about it, but you basically wrap the current mortgage around, and then you structure it so that you're now wrapping your mortgage around the existing mortgage, and then you work with the seller and the buyer, or you work with the owner of the property to take over the payments, and then they move out. And it's almost like a Pandora's box of like, how can you figure out? And at the end of the day, regardless what method or strategy you use, it's important that if you're starting out, or if you're even a seasoned investor, if you want to be a good person, like we talked about, and you want to be in your market, whether it's local or it's abroad. People want to work with people who can take care of a pain point.
That's right.
And when somebody has a pain point and you're genuinely concerned about making sure that person's pain point is taken care of, whether it's putting them in a hotel for a month or making sure their car has gas, or I'll have somebody clean out or replace your door handle for you so that you can lock it, or whatever those things are, that's a pain point.
Mm-hmm.
And you're just trying to be a good human. At the same time, you're trying to wrap up a real estate deal, but you're being a good
That's
human
right.
first. I think something my grandpa told me a long time ago is, Travis, he's always find value first and the money will follow. Always find value first and the money will follow you. When you try to pursue money first, you're never going to have the full value and you're never going to have that opportunity to be impactful in the world. And I'm like, I
That's
guess,
dope.
Grandpa.
Now let's speak. Flashing back, do you want to talk about the consequences of doing short sale?
Nah.
Okay. All right. Just want to make sure. Okay. All right. So it'll be a long pause and then we're going to start again. And once we start again, we're going to talk into what's next. Right. All right. So that is an amazing journey, man. We talk single family and then the recession happened. Now, we'll talk briefly about subject two. But in the introduction, you mentioned that you also did some out of state commercial reposition of properties. Tell us about that journey and some of the challenges, how you got into it, and some of the challenges that you face by doing out of state
Sure.
flipping of commercial properties.
Yeah, I worked with a company and they were like a one, they had wholesaling and they had a flip business.
Okay.
So got connected, ran the numbers on this 5 unit in Cleveland. All the numbers worked good. I bought a 5 unit for about 30,000 a unit. The contractor was there. They had the budget. We had everything. I ran the numbers, checked it out. Hey, how much is lumber? How much is a room? It takes this much to do a bathroom, this much to do a paint, ceiling. I had all those numbers down. So we start in January. March, half of a unit's done. April, May, June, still working on the same unit. I'm like, hey, so I fly out there and it's chaos. I'm getting pictures, but it's just the same picture over and over again. I'm like, something's wrong. So I fly out there.
Oh, shit.
I ended up meeting a contractor out there who is a good friend of mine now. I fire the contractor that was original there. $50,000 later, I get it. My new contractor buddy, Steve, gets it done in 6 weeks, all 5 units.
Nice.
Crushes it. And we sided the entire outside. So it's rented. It's becoming rented. It's a 3-2 upstairs, a 2-1-2-1, a 1-1, a 1-1. And then a basement, huge basement, like 2,500 square foot basement.
Right.
I'm like, yeah, okay, this is going to be a cash flow machine. It's going to make $2,500 a month. I'm like, this is awesome. I got an appraisal and it went from 30,000 unit to 70,000 unit in an 8-month time frame.
Yeah.
And this is 2019, 2020. And I'm like, yeah, I'm going to sell that. Had it sold 5 days.
That's awesome.
But the $50,000 lesson and the value of communication, that contractor ended up getting sued by 3 or 4 other people that were the investors. With the company dropped, like it became a whole fiasco. If you want to do a commercial flip or a flip out of state, like you go out there, walk the ground, shake hands, look people in the eye.
Yeah.
Vet.
Yeah, to your point, man, I had similar issues down in Pensacola, right? We had a guy who came on a project and he just could not deliver. The project was bigger than his capability or his team could manage. And then that brought us to another contractor who did phenomenal work. And we met him with the boots on the ground. He saw where the project was going. He understood the vision, and he had the resources to get it done in a timely manner, to include fix a lot of things that a previous contractor did or messed up. It's important that you actually boots on the ground. And we do the same thing too in larger multi-family properties as well, where we have to go there and do a due diligence. We're walking through with the property managers and also the maintenance guys or the general contractor if it's going to be a heavy lift project. But talk sense in the business plan before we actually start putting money hard. So one thing I'd like for you to cover, Travis, you mentioned that you bought a small commercial properties. Can you help our listeners understand the difference between what can be considered a single family property or a residential multifamily versus a commercial multifamily?
Sure. Typically, it's 4 unit or less. So a quadplex down to a duplex is considered residential multifamily, and
Right.
5 units or over is considered commercial in most states. But always check with your state because it may fluctuate.
Yeah. So how does qualification change between those two asset classes? I know we only got 1 unit different, right? 4 unit, 5 units. How does qualification for those loans change and the valuation changes for those property?
Whole bunch with when you get into commercial multifamily, even at 5 units for the state of Ohio, you now become an entity. You're a business. You're getting with commercial loans. You're meeting with commercial lenders. Whole different set of rules, whole different set of requirements, whole different set of paperwork. Whereas if you're buying a quadplex, you can still be Travis Hill with your W-2, your income, your debt to income ratio, like all that stuff, your bank statements. You can still do that at a quadplex. But as soon as you go into the commercial realm, now, like understanding that your LLC should probably have some business credit,
Yeah.
it should be established where your funds coming from. It's a different ballgame.
Yeah, and the cool thing about it is that you as an individual, once you go 5 units and above, you as an individual, in most cases, depends on your lender, is not qualifying for this mortgage. The property itself is qualifying for the mortgage based on one, its the current net operating income,
Mm-hmm.
and right, and also some lender, especially if you're using a local credit union, they will consider the ARV, and sometimes they will lend you a portion of the capital expenditure to actually perform the renovation, right? The 26 units we have in Augusta, Georgia, we have something similar with a local lender to help us with the renovation. So instead of going a loan to value, we do a loan to cost mortgage, which a portion of the renovation is financed with that local credit union. So commercial real estate gives you some more strings you can pull on to get better economics for the property. And what do you think about that, Travis?
I think, yeah, you're spot on. One thing that I will say is dealing with commercial, I had a hard time
Right,
finding credit union because bigger pockets. A lot of people say, "Oh, use your local banks, use your local banks."
right.
When you invest out of states and they find out that you're not local to them, I've had many banks, like almost a dozen, tell me, "Hey, you're not in my footprint. You're not in my footprint." Yeah, but I'm providing value. Like my loan to value, my after repair value, my ARV, like I'm almost 2.5 times the ARV because of what I'm doing to the rehab. Yeah, but you're not in my footprint. So that was a struggle for me because everything the bigger pockets and other people gurus are saying, like, oh yeah, you just go talk to the bank, man, they love you. No,
Yeah.
somehow your money's different when you're, and maybe it's because I said I'm from California because I'm active duty Marine, and they're like, oh, California will just check you right off. Now we need to change states. I don't know.
Now, to your point, man, a lot of credit union, they like when you're local. So even looking at some small multifamily here in Hawaii, and the biggest focus I have right now is the developing relationship with some local banks to be able to take some of these properties down. You know what I mean? But it's a whole different story. So you went from single family, the Great Recession, to small commercial multifamily properties, and now you're doing something unique with that gives you a lot of control, right? There's not a lot of equity built into to this deal, but it does give you the velocity of your capital, and your money is working significantly harder in this investment strategy that we're getting ready to talk about than it would be in a bank or a money market account. Do you mind sharing with us your current focus as far as your strategy for real estate investments?
Sure. Yeah, what I'm currently focused on is private money lending.
Interesting.
And what that does is it gives me a twofold effort in maximizing or turning my money over. So when you do private money lending, you can either focus on the equity side or the debt side or both. And what I mean by that is I take capital, let's just use $100,000,
Right.
$50,000, right? Because we're starting off and we're talking to veterans. And no disrespect to veterans, but we are not programmed, nor do we talk enough about having disposable income and assets. Like, oh, just focus on the TSP or just focus on your blended retirement. Yes, that's important, but there's other aspects and ways that you can compound your money quicker or use the velocity of money mentality to expedite your money making more money. So I take $50,000. I say, hey, I'm a private person. I'm not advertising. I'm not a company. I will give Hutch $50,000 at an annualized return. We're going to use 10% because that's just an easy number.
Yep.
So if I make a promissory note, Hutch says, I have this property. I'm going to buy it for $100,000. You're going to give me $50,000. I'm going to do the repairs and I'm going to sell it for 150. Cool. I give you $50,000. I'm in now first position. That means that if Hutch decides to take my 50 and run to Mexico, I have a property.
Yeah.
That's mine, because the promissory note, whether it gets recorded, whether it doesn't, totally depends on how you want to structure that. Recorded meaning with the title company in that state, or some states close with a lawyer. Check to see what your state says. I'm in first position. I get the annualized return. Now, the beautiful thing about private money lending is that I can now, Hutch and Eve can have an honest conversation, sit down across the table and say, how am I going to get paid at the end of the year, or that, or less, because it's a 365 interest accruing action. I'm going to get my principal and my interest back, because I take $10,000, I divide that by 365 or divide that by 12, and that's a number.
Yeah.
I think it's $416 a month or something like that. So you can then say, hey, I want to be paid that $416 every single month until you close. Or you can say, hey, I'll take the principal and the interest at the end of the note with no prepayment penalty, meaning that if Hutch owns my money for 10 months, he doesn't get penalized for not holding on to it for a year. But that's the beauty of private money lending, is that it's a conversation between the owner and the borrower, the grantee and the grantor, of how they want to structure it. That's power. Now, moving on to the equity side. My first example on the debt side was 10%. Maybe I say, hey, Hutch, I'll give you $50,000, but I think you're going to have a grand slam. That thing's going to sell for 200. I want to have 5% of the equity when you sell it, of the 200, but I'll charge you an 8% interest. And you're like, I get 2% less interest. So that's only $8,000 instead of 10.
Mm-hmm.
But then I'm going to get an extra $3,000 or $4,000 on the equity because I'm willing to do that. That may work for you. That may not. That's totally okay. But that is at least gives everybody an opportunity to weigh in for the buy-in of that deal. Now, some people will be like, I don't do 10, I do 12 or 15. That's okay.
Yeah.
Some people are like, oh, I charge 10% and 2 points, which is a point is 1% of the purchase price or whatever that amount you're giving.
Right.
That's okay. But again, it's communication, it's sitting down, and it's identifying how can I help you make your deal work, and how can we both make a profit? Because profit, when you're doing this business, should not be a dirty word. It shouldn't be.
That's right. Yeah, that's how you create a win situation, man.
Yeah.
When you start talking about private money lending, you mentioned that whenever you loan on the property, you are actually recording your promissory note with the county, state, or city, whatever the requirement is for that environment. And the key thing to note about that is that's probably one of the most important thing that you can do. Give notice to the public that you have a recorded interest in this property. So then also, I like the way you transition into where you create a win situation by being the lender, right? So especially if you invested with somebody, an investor who you know is going to do several flip over and over. Yes, you can do one deal and they can move on to somebody else and find some better rates. But if you're creating a win situation and you are meeting and sitting there across the table and understand each other's pain points and understand the vision for the future and see how you guys can make it together, that could turn into something beautiful, man. Especially if you are a high net worth individual that is also a business professional and you have some capital that you want to leverage and you want to maximize its velocity, right? But you don't want to put it into a syndication for 5 years. You can lend it short term so you can get it back in 6 months to a year, or you can continue rolling that thing over and over, equity points and different interest rates. So it's good to create those relationships that will help both party, you yourself as the lender and also the investor, in creating a win situation and a long-term trajectory of growth in both of your finances. So that's a unique strategy, and I like that. I like that.
Thanks. Yeah, I think you look at financially successful people,
right?
They're giving back and doing that are good humans, right?
Mm-hmm.
They have so many different income streams. And I think that we sometimes get lost in, I need to work so hard on this one thing, which I'm not saying if you haven't built a bridge, you shouldn't just stop the bridge halfway. Make the bridge connect between where you are and where you want to go. But true financial freedom happens because you have different income streams, and the money is learning how to make money across those income streams. For example, I started off with doing a land deal in Arizona. It was 5 acres. It was $20,000. That 10 acres became 15. That 15 became 25. And now we're sitting on like 100 acres in Arizona. and we're getting a 10% return. It was 6 and went to 8, but we've been doing that for what, 6 or 7 years. And
Right.
that just validates your point. Second example, I did some private money with my good friend Tyler in Milwaukee, different from the homes I owned. And our setup was a 10% annualized return. He could keep the interest, and I just wanted principal and interest at the end because I didn't need it. It wasn't a live. If I was retired and needed to live off of it, totally different conversation, right?
Right.
That money that I lended him 4 years ago has turned into him being connected with people that reached out. Hey, what are you doing? Oh, I'm doing over here. He does really great construction and doing rehabs. They got connected to an apartment developer who turned 40 units. Now they got a hotel they're doing 24 units on. So that network, when they say your network is your net worth, truly, I'm watching it happen in my life. And that's validates that your success is my happiness, that they're in Milwaukee from me having private money loans with them to them now being able to turn 80 units in the next 2 years just from connecting a network. Be like, hey, go talk to this person. I'm looking for a great contract in Milwaukee. Oh, go talk to Tyler. Boom. Right.
Man, I love it, man. So one of the things we haven't touched on yet, being that our focus is apartment syndication, right? How does that fit inside of your investment strategy, whether it was previously, now, or in the future?
Oh, being an LP is great. The way when I tell people what a limited partner is, especially military members, they look
Right.
at me like I'm weird. And I said, this is how I explain apartment syndications to you. It's the easiest way that I understand it and know how. General partners are the ones that put the company together. They file everything with the Security and Exchange Commission. They're the pilots of the airplane. Then all the seats in the airplane are filled with limited partners. They all put their money in and say, hey, I think this is a good deal in this location. I'm going to get this type of return. I recommend that everybody get a preferred return, which means that the LPs get paid before the GPs.
Right.
And then the plane is the deal that goes from point A to point B. And you are just in the plane, watching your movies, eating your freaking nuts and your Chex Mix, maybe occasional alcoholic if you want to, or alcohol beverage. But you're the LP receiving that while that plane is being flown. And then you land and you get off and you get your bag and you get your principal and everything else and you go about and do it again. That's how a syndication works. So when they talk about mailbox money, like you're literally getting paid monthly, you're getting paid quarterly, however that deal is structured. And if the general partners are doing their due diligence, which we're seeing a whole bunch of this bridge loan, which is a whole nother conversation and podcast as far as what's going on in the multifamily space and what LPs are learning, unfortunately, about greedy, unverified, poor underwriting.
Yep.
That you as an LP need to be just as educated, if not better, to understand how people can manipulate numbers to make it sound like you're going to get a 20% return in every single deal possible. But then being comfortable with the team, their experience, how they're going to structure it, what communication is, what good, bad communication is. If are you willing as a general partner to tell 100 LPs, 200, 300 people, 50 people, if they're putting up, depending on how much money they're putting up, are you willing to tell them that you just had an underground pipe break at the main and so now you have everybody doesn't have water for the next 2 weeks? Can you have those conversations? And as an LP, can you digest that conversation? Yep. Because if everything you think in this real estate game, if you decide to get into it passively or like straight in, I'm going to be a contractor when I get out, you're not going to leave here without bumps and bruises. Like your McMap course is going for sure in real estate investing.
Yeah, man. I love that analogy, man. You can even extend it further than that, right? Because you also got the lady or guy at the ticket counter, those people moving the baggages, talking about a maintenance personnel, a property manager, a syndication attorney, all that big in the team. But as you took us to that journey, man, and when the plane get to the destination, meaning we get into getting ready to exit the aircraft, exit this property, the limited partner, they take this stuff and they leave. And if you notice, the pilots and the co-pilots and the rest of the crew, they usually stay on the aircraft. To your point about profit, they get paid after the projected return has been satisfied for the investors. So it's a really cool analogy that you use to help, especially if you listen to this right now and you are a pilot in the Marine Corps or any branch of service, they need to understand that process as well and how it relates. It's an easier way for you to understand or compare what a limited partner and general partnership is. But passive income, to your point, is not always passive. Sometimes the income coming slower than projected, right? Because of the macro and the microeconomics that sometimes could not be projected or could not be built into the business plan. When you have people who did conservative underwriting, in most cases, we can weather that storm. So great points that you brought up, Travis. So
Thanks.
anything to add?
Yeah, I think it's important too that anytime that you invest in real estate, when you choose to do apartment syndications as a method, right? Like I have this extra income that I'm not using that I want to maximize better. You come to that realization. People, if limited partners don't understand their own risk tolerance, it's very hard to write that check, to wire those funds if you don't understand your own risk tolerance. So I share with people that you got to have your understanding of what risk is to you. My wife is much more conservative with risk than I am. And that's okay. But we have to approach conversations like, hey, I'm fine with moving this amount of money over here for this. I'm not. Okay, then I got to figure it out. If everybody's, dude, I'm Wesley Snipes putting it on black and rolling it. Let's go. If that's how you roll, that's how you roll. But that swing goes the other way just as hard. So understanding when you choose, yes, apartment syndications, being an LP is how I want to move forward. Knowing your risk tolerance, accepting that risk tolerance, and being fine sitting in that mire of risk tolerance, it's much easier to deal with the ups and downs.
Yeah, most definitely, man. I think one of the biggest thing is just really taking time to build a relationship with the people that is going to be responsible for executing this business plan, because trust goes a long way, especially when those check doesn't come in for a while. You know what I mean? It's really important for you to understand that the people who are managing those assets are actually good people and are doing what they say they're going to do with the level of economy that they're going through. So yeah, definitely ensure that you invest on trust, and you should start there. Right. Yes, sir.
100%.
Brother, I really appreciate you joining us today, man. Do you have any parting words for example, a veteran that is approaching retirement or might have just retired?
Yeah. Wow. If you've retired, what's it like? And if you're approaching retirement, I'm just as scared as you are. I think that it really depends on I don't know. There's so many things as far as if you've just retired and you've chosen your path and you're digging it, keep being a good member of society, right? Like we preach all the time, whether you do 4 or 40, you should always go back to the community that you came from or a new community that you decide to enter yourself into. You should make that place better. If you can do that through real estate investing and you want to provide safe, secure housing for people in your community and be a good steward of not only your money, but fiduciary responsibilities of others, go do it.
That is awesome, man. So you said something before I ask this question that I really want to dive a little bit more into, and I think it will resonate with a lot of our veterans and also some of our folks in active duty as well. I think just people in general, or people who have a joint household, regardless of the structure. If you're using the joint income to actually manage that household, each person is going to have different risk tolerance, right? Of course, the risk capacity will be owned by the entire family or by those breadwinners inside the household. But the risk tolerance, how do you navigate that conversation between yourself and your spouse to be able to come to a decision point in saying, this decision is in the best interest of our family?
Yeah, great question. And that is so specific to each family.
It is,
I
yeah.
will tell you that my wife and I will sit down. She's much more detail orientated than I am. And
Right.
so she's all about making that checklist and the weighing the pros and cons. And whatever we decide, we're going to pray about it before we ever write anything or wire anything. We're going to make sure that we pray that we both feel good about it and that we
Right.
are comfortable. Are we in a state that if we lose this money, like the house, that property goes and burns down? How does that affect us? Because that's the worst case scenario. We don't ever get the money back.
Right.
And having a real conversation about that and understand what that does to the impact for family, if any. And then if we're okay with that loss, we've weighed the pros and cons, we've prayed about it. And then if we feel good, then we're going to move on.
I like that, man. I like that. So it's a joint operation.
100%.
Most definitely, man, because there's something to be said about going to a deeper level than just general understanding. When you take that thing spiritually, man, then you're talking about a level of alignment that will weather any downside, whether it's total loss or a lower than projected returns. So once you have that understanding, we are taking a risk here, and we're both willing to go through with the risk, then it definitely it helps the dynamic as you go through it in the household. Athena and I, we have some of those conversations as well to ensure that we are making joint decision. I don't, if I want to go to the store to buy me a gallon of water and maybe a 5 hour energy drinks because I'm a little bit tired at work, you know what I mean? I hit up Athena. Do I have money on my professional obligation fund, which is, I send a little money to my Navy Fed account, like $50 a month. That's mine. If she check it, okay, good. But if I need to spend anything bigger from our personal account, then I'm having a conversation with her. And this is just like minimal things, right? Buying some socks, buying some extra green shirt because I forgot my boot bands or t-shirt at home. Like little things like those. The conversation is happening before any big decision is made. And I think that is important. That is a topic that costs a lot of people, their family. So it's really important to get comfortable talking about making those decisions. So kudos to you and your spouse, man. And I trust that somebody listen to this. If you listen to this episode and you really want to you really want to have better conversation with your partner or spouse in the household, definitely take some time to go deep in getting a better understanding of exactly what you want to do. And when you sit down with your spouse or your partner in the household, you can help them you can almost educate them on why this is important unbiasedly. And I trust that you have enough trust within your household to say, okay, I know this man, this woman, this man is making a good decision, or his recommendation is in the best interest of our family. So, of course, you start on trust, and then you build from there. And of course, make sure you have that spiritual alignment. So, kudos to you, man. We can go on in these conversations, brother. But let's roll into the focus round, man. Travis,
Okay.
what do you do? What do you do for fun?
I'm grateful every day to be stationed at Camp Pendleton and live in SoCal. I get to live in San Clemente. And so my housing, my off-base housing is about 500 yards from some of the best breaks in SoCal. So I'm surfing in the water every single time at first light. And when the sun's up or the sun's down, if I'm not in the water, I'm either at the gym or I'm training jiu-jitsu. Those are my three personal hobbies that I like to do.
Right?
And then again, being out in SoCal, like you're a mandated reporter to be out getting some with your family along the beach trails or the hikes or just biking around. It's an outdoor life out here.
Yeah, go get some, man. Life is motion. Now, Travis, before we get into the you of the focus, all of the focus, it sounds as if you wake up every day and your goal is to live life to the fullest. Is there things that happen in your life that give every day a little bit more meaning and purpose that you want to
Yes,
share with
it
us?
absolutely does. Yeah. I've been a very active man my whole life.
Right?
Always don't drink, don't smoke. Always been very conscious and aware of what I eat. And was living in Okinawa, stationed in Okinawa, and ended up had a colonoscopy and ended up getting stage 3 colon cancer in 2019 and having to leave the island. And our family, like you talk about uprooting, like the physical act of ripping roots out of the ground. That's what we felt like when that diagnosis came through. Spent a year at Wounded Warrior Battalion detachment down in San Diego going through treatment, radiation, chemo, had an ostomy bag for about 8 months and then got resection again in 2020 and was fortunate and not only fortunate, but I just had the mindset that I'm going back to the fleet. And Wounded Warrior was like, they typically get med-sept. I'm like, typically you don't know who I am. So I'm going to go back to the fleet. So I was fortunate to go back to the fleet in August of 20 and have just been cranking it on. So that I'm grateful for the Marine Corps that has taught me how to focus on the mission and the task at hand and to remove my emotions, right? And my goal is to beat cancer. My goal is to wake up every day and make it around the block. My goal is to get out of bed and to hug my kids and to kiss my wife and to go downstairs when the days that I could, or try really hard when days that I couldn't. And so keeping that attitude and keeping the positivity, because when you're in that situation, it's very easy to dig that woe is me hole with an excavator. And that experience as a family brought us together. It helped me realize that, hey, every day above ground is awesome. And it really solidified that mantra of being a good person, of understanding that, hey, it could happen and be over in a second.
Mhm.
You never know what life is going to throw at you, but you can't always dictate how you're going to react to it.
So happy here, man. I feel so blessed to have you as a friend, man. To have met you a few years ago, man. This is awesome. So thank you so
Thank
much
you.
for sharing, man. And thank you for being a strong person and also more importantly, man, a good person because that has a lot of value, both the way you feel about yourself and the things that you're committed to. So kudos to you, brother. So
Thanks, man.
what do you say is one opportunity that was a game changer for you?
One opportunity was a game changer for me. I will say, from a real estate investor standpoint, was meeting Dave Perret and being a part of the for military millionaire community. I will say that from that has brought me the opportunity to be with my squad members in Green Squad and being surrounded by amazing active and veteran military members that have the same fervor like yourself,
Right.
the same drive, the same passion, the same understanding, and how they see the world of opportunity, not only with real estate, but with business, with life insurance, with knowing that you can have businesses pay for vacations because you're out there reorganizing your table of organization and you're having your presidency meetings and employing your kids in your business. Like all these things I didn't even know existed, but they've always been there.
Right.
That is, meeting Dave Perret and being a part of Green Squad and being a part of surrounded by people that are just doing amazing things has opened up so many incredible doors that I never knew existed, and just be like, wow, I can do that. I can fail forward. And because that person is ahead of me. And what's amazing about that community and this community and is that everybody that is doing things
Mm-hmm.
and that's above you, they're always willing to help you. They never will be negative to you. They will never tear you down. But everybody below you that is jealous, insecure, whatever, they will always be that crab that'll pull you down out of the bucket
Right.
every single time. And I think there's so much power in being surrounded by people that are like, yeah, man, that really sucks, but you're crushing it. Keep
That is
going.
awesome, man. That is awesome. So what would you say is your number one communication tip?
Number one communication tip: be genuine. Be
It's a good one.
genuine. Look somebody in the eye. Look them in the eye. Shake their hand. Be grateful because you are grateful to see them or to meet them or to listen to them. Be genuine.
It's awesome, man. What is one thing you wish you understood earlier?
One thing that I wish I would have understood earlier
Yeah.
about me or anything,
Just anything, concept, theory, a quote.
I wish I would have learned to tell myself okay earlier. Like it's going to be okay.
It's awesome. So to what do you attribute your success?
I haven't achieved it yet.
I never got the answer before, but that is acceptable, man.
But if I did achieve it or what I'm striving to achieve,
There we go.
just stubborn perseverance.
Yeah. Never give up. Don't quit. Never back down. Go get it.
Yeah, I saw on LinkedIn one time, it's one of the very beautiful example is that you see that it has success or starting point and success, and it was a straight line. And then it zoomed in and that line went like this.
Yeah.
And then it zoomed in again and the line went like this. Then it zoomed in again and it was like this. And I'm like, man, sometimes that's what my life feels like, especially with a wife, 4 kids,
Yep.
active duty, side hustle. Like sometimes I'm like, where the freak am I going? Oh, I'm still striving that way. Yeah, but I'm way over here. Yeah, but I'm offsetting, but I'm still on course.
Got you, man. Greatly appreciate you, man. So, man, if our listeners want to get in touch with you, man, what's the best way to do that?
I would probably say Instagram at Travis Hill 1310. I'm also on LinkedIn with Travis
Okay.
Hill. And yeah, happy to talk. Happy to
Yeah,
help
brother.
you. Like I said earlier, happy to get you your ladder on the wall and have you start climbing.
Appreciate that, man. So, Travis, I want to thank you again for joining us on this podcast. And listeners, look, we talk about several different opportunities or options for you to ensure that you're putting yourself on the right path. Look, there's really no clear, specific path or one path that you have to take. Like all these folks are there tell you this is exactly how you need to do a thing. right? There's so many different ways for you to do the thing because look, this is your journey. But what is most important is that you are weighing your risk tolerance and your risk capacity, right? And keeping your financial and your life moving forward. This is your journey. Live it to your fullest and ensure that you never settle for a life of mediocrity. So, Travis, I appreciate you sharing your story with us, man, your journey. And listeners, I want to thank you again for taking the time to listen to another episode of the Multifamily Real Estate Experiment podcast. I'm Hutch, the Marine Investor, out.